Hello, everyone. This is chapter 2, part 2, cash flow from asset. So from now on, we will see the cash flows. The cash flows are the most important factor in the finance field. So what is the cash flow? Again, cash flow is one of the most important pieces of information. We can derive it from financial statements, including the balance sheet and the income statement. You probably already learned the accountant's state of cash flow, but this is not the one that we are interested in. We are more interested in the financial cash flows. So our focus is how cash is generated from using assets. So we use assets in the balance sheet and we generate cash flow, and how it is paid to those who finance the asset purchase, who are creditors who provide the debt financing, and stockholders who provide the equity financing. So this financial cash flow is also called the free cash flow. To start with, to calculate free cash flow, we start with the identity rule in accounting. As we all know, asset equals to liability plus equity. From these identity rules, we should have cash flow from assets. So this cash flow is coming from using asset equals to the cash flow to creditors, liability holders, or bond holders. So we can say that this is cash flow to creditors or liability holders or bond holders, debt holders. They're all same people, right? Plus the cash flow to equity holders or stockholders, shareholders. Again, they are all same people, just a different vocabulary. So the free cash flow should have another identity rule like accounting. Cash flow from assets equals to cash flow to creditors plus cash flow to stockholders. Now we start to look at the cash flow from asset. Cash flow from asset has three components. The first component is called operating cash flow, coming from operation. Operation means company's main business. So if you own a restaurant and sell pizza, then sales from pizza is gonna be operational income, right? So operating cash flow comes from the operation, company's operation, from sales cost structure. Second component is called the net capital spending. Net capital spending is cash flow changes due to fixed asset changes. So if you sell some buildings or equipment, you receive cash. If you buy land, equipment, any fixed asset, you use cash. It is called a net capital spending. This is also called capital expenditure. Or CapEx. The third component is called changes in net working capital. This is from daily cash flow, daily operation, such as the collecting cash, paying cash, and so on, or inventories. It's called a change in net working capital. So cash flow from asset equals to operating cash flow minus net capital spending minus change in net working capital. The first component is operating cash flow, can be calculated by this formula. So starting with the EBIT, which is earnings before interest and taxes, is income only before, like, so you subtract all the costs except the interest and taxes. That's EBIT, EBIT. And because the depreciation is not cash item, we have to add it back. So plus depreciation. And then minus taxes. That's how to calculate operating cash flow. So we have example here. The Smith Company has sales of $313,000, cost of goods sold of $228,000, interest expense of $6,500, depreciation expense of $49,000, and the tax rate of 34%. What is the amount of operating cash flow? So to get the operating cash flow, we know the formula EBIT plus depreciation minus taxes, right? To get this, we need to build income statement first. So every time we calculate operating cash flow, build income statement first. So the income statement of this company is starting from sales. Sales is 313,000, and cost of goods sold 228,000, and then depreciation 49,000, and we can get earnings before interest and taxes, sales minus cost of goods sold minus depreciation, $36,000. We know interest expense is 6,500. Okay. So taxable income, which is the income that you pay tax, is 29,500. Right? Now taxes is 34% of the taxable income. So 29,500 times 0.34, which is $10,030. So the bottom line of income statement is net income, which is 19,470. From this information, we only pick the one that we need. So first we need EBIT, right? Second one, we need this depreciation, and third one is taxes. See, so operating cash flow equals to the EBIT, $36,000, plus depreciation, 49,000, minus taxes, $10,030. So operating cash flow is $74,970. That's how to calculate operating cash flow. Second component is net capital spending. So net capital spending is change in fixed asset. And there are two different types of fixed asset you can find in balance sheet. First one called the gross fixed asset. Gross fixed asset amount is the cost of acquiring asset, which means when you buy something, so suppose you buy $1 million building, then your gross fixed asset amount is just 1 million. It doesn't change. However, as we know, we depreciate, right? Depreciate this building by a certain method. So suppose 2 years later, we depreciate like $200,000. Then the gross fixed asset, which is 1 million right here, accumulated depreciation, 200,000. That difference is called the net fixed asset, which is 1 million minus 200,000, so 800,000. That is net fixed asset. Because gross fixed asset amount is the amount of cash we pay or we receive, we should focus on the change in gross fixed asset. The problem here is, many cases you don't have this information, you only have net fixed asset information. Then we need to convert this formula a little differently, like this. So gross fixed asset changes, which is so say T is the current year and gross fixed asset T minus 1 is the last year. That's the changes, right? This is same as, because gross fixed asset equals to net fixed asset plus accumulated depreciation, right? So net fixed asset current year plus accumulated depreciation current year minus net fixed asset last year, right? Minus accumulated depreciation last year. From this, we can rearrange this net fixed asset current year minus net fixed asset last year plus accumulated depreciation this year minus accumulated depreciation last year. So the first factor is the change in net fixed asset, right? And the second factor is the change in net accumulated depreciation, which means that's current year depreciation expense. So if you only have the net fixed asset with the accumulated, depreciation expense, then you can use the formula, the last line formula, change in net fixed asset plus current depreciation expense. Let's look at the example of the net capital spending. So Babcock Industries has ending net fixed asset of $703,219 and the beginning net fixed assets of $741,089. The depreciation expense for the year is $62,340. What is the amount of net capital spending for the year? So we only have net fixed asset and accumulated depreciation, right? Depreciation expense, not accumulated one. Depreciation expense. So we can use the formula again, net capital spending equals to net fixed asset ending minus net fixed asset beginning. That's the changes, right? and then plus the depreciation. So, and the net fixed asset is $703,219 minus beginning is $741,089 plus the depreciation 62,340. So net capital spending is $24,470. That is how to find net capital spending. The final item is change in net working capital. So change in net working capital is just a change in net working capital, which is the net working capital current year minus net working capital last year. But what is the net working capital? Net working capital is the difference between the current asset and the current liability. So if the current asset is greater than current liability, which is usual case, then net working capital is positive. If the current liability is greater than net working capital, it's negative, which is rare, or it is actually problematic. So if change in net working capital is positive, then you spend cash to buy more current assets, right? So decrease cash. If the net working capital change is negative, then you receive cash from selling more current asset again, so increase cash flow. So that is how to find the change in net working capital. You can actually practice it in pop-up quiz. Current asset item, current liability item is also can be found where? In balance sheet. You can find it balance sheet. So this is pop-up quiz. Find cash flow from asset. So to find the cash flow from asset, we should have three items, right? These three items, operating cash flow, net capital spending, and change in net working capital. Operating cash flow is EBIT plus depreciation minus taxes. So let's find it. So EBIT is where? So you can find, let's find it. EBIT is here, right? That's earnings before interest and taxes. $670. Where is depreciation? Again, depreciation can be found here, right? Income statement, $89. And then tax is, you can find tax here, $126. So 670 plus 89 minus 126 is $633. That's operating cash flow. Net capital spending is, now change in fixed asset. We only have, again, net fixed asset. So change in net fixed asset, which is 1,709 minus 1,644. That's change in net fixed asset plus depreciation 89. $154. Change in net working capital is, now, first of all, we need to calculate the net working capital. So last year, I mean, current year, actually, net working capital is current year $1,403 current asset minus $389 current liability minus 1,112 last year current asset minus $428 last year current liability. So if you calculate this, then you're gonna have $330. Finally, what you should do is you need to get the cash flow from asset, operating cash flow minus net capital spending minus change in net working capital. So it's gonna be $633 minus $154 minus $330. So $149 will be cash flow from asset. So that's how to find cash flow from asset.